listening to. You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. And I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. And yes, of course, we are celebrating today. We celebrate every day on Ron Siegel Radio. Let's see what we've got on our agenda of celebrations today. National Peking Duck. Okay, I like that one. No whipped cream on that. That's good. Peking duck. So kind of fascinating. If you've never been to China, they bring the duck out, and it's, you know, they've got the head plastered to the rest of the body, and they show you the whole thing, the way they've made it, and then they take it back in the back and cut it up for you. Pretty interesting the way they do that. And we're also celebrating, not to bother, National Winnie the Pooh Day. Oh, bother. I think, isn't it? Oh, bother. Oh, bother. Oh, bother. You know, I'm old, so my grandson hasn't got to his Winnie the Pooh days yet. So we're still on Sesame Street. So, you know, Winnie the Pooh, I'm sure we'll get there. Probably get him a little bit of honey. I don't know whether his parents would like it if I gave him the honey from still a little bit of Winnie the Pooh's honey, but you know, that's what grandparents are for, isn't it? I'm just throwing that out there. Let's take a look and see what the markets are doing. Ooh, the Dow Jones Industrial Average is down 349 points. The S&P 500 is down 30. NASDAQ is down 65. Oil's up $1.19 a barrel. And the 10-year Treasury is down almost 8.25 basis points, 342.3. Wonder why? Why is all this happening? We're going to tell you. We understand it. Looking at gas prices, they're holding, not doing a whole heck of a lot. So it looks like yesterday 332 was the national average. Today it's 335, so up about 1% on gasoline. I know the president's got it all under control. Hey, speaking of gasoline, I don't know if you heard this story. This is, I guess we have this under the breaking news segment. Legislation has been proposed in the state of Wyoming. I don't know if you saw this one. State of Wyoming legislation proposed to ban all electric vehicles by the year 2035. Think about that one. Now, I know it's Wyoming, and if you look it up, the population of Wyoming is 581,000. But I think they're looking to just stick it in the eye of California. I think that's what it is. Because part of this, you got to realize, 12% of Wyoming's population works either in the oil industry or the pipeline industry. So their whole idea of going all electric, they may not like that one. And on the other side of that, I don't know about you, but I haven't seen, we got some bad weather across the country pretty much for the last month. There's been a lot of bad weather, various parts of the country, various times. I'm not sure I've ever seen an electric tow truck other than the ones that my kids used to play with a lot of years ago, right? I don't think I've seen an electric tow truck. What's going to happen with the electric vehicles if they need to be towed? Just throw that out there for you. And obviously, we know what happens in California. We can't even use air conditioners. And now we're going to take and put, another 10 or 15 million electric cars on the grid. Does that make sense to anybody? Am I the only one that finds this fascinating that we're going to try and be all electric, or and that the state won't be able to help, because think about this one. Last year, do you remember, maybe March or April, our governor was telling us about our surplus funds in the state. And he used that line, and I will share it.
Such an idiot.
Yes, he
Such
is.
an idiot.
So he used that line to give out his bribes for the elections. I'm sorry, rebate checks. He called them inflation adjuster checks or something. I don't know, some farce. There was a bribe. He wanted people to vote for him. It's California. They were going to vote for him anyway. Nobody other than a Republican ran against him, and a Republican's not going to win in California. But he gave all this money away. I don't know, billions and billions and tens of billions of dollars. And then this year we've got a shortfall. We don't know. We've got a budget deficit. We don't have enough money to pay the bills. And that's going to create some of the infrastructure to help us with these things. I'm just throwing that out there for you. I don't know where the money's coming from. Well, yeah. It doesn't. You don't have to have the money in the United States any longer in order to spend the money. That's just a whim. Some people do it, some don't. That's just an issue that, that's a whole nother story. Mortgage 101, a workshop for you, brought to you by our friends at creditsanitizer.com. You have a credit report, it is wrong. What are you doing about it? Mortgage 101. How much do you need for a down payment? That's going to be our theme today, is buying a new house and down payments as we're getting closer to the spring season. Seems like you've been trying for years to save enough money for a down payment for a home. You've cut corners, taken lunches to work, and yet home prices continue to rise, and your dream of owning a home seems out of reach. Guess what? Maybe you're closer to owning a home than you think, because for many loan programs, you do not need 20% for a down payment to purchase a home. I'm here to talk to you today about why you don't need 20% down to buy a home, no matter how much you may have saved. There's probably a mortgage program that can help you right now get into a home. Let's take a look at a few options out there. Let's look first at the FHA home loan. FHA loan, 3.5% down payment. FHA loans are insured by the Federal Housing Administration, FHA, and these loan programs are perfect for first-time home buyers. FHA loans require mortgage insurance premiums, or what is called MIP. Another great low down payment program is the Home Ready Mortgage. The Home Ready Mortgage, 3% down payment. Again, another low down payment loan available through Fannie Mae. The Home Ready program allows for 3% down, grants access to below market mortgage rates, and offers discounted rates for private mortgage insurance. Home Ready also gives you the ability to use income from everyone who will be living in the home toward the actual mortgage approval. This can include parents earning pension or Social Security income, or roommates who want to go all in and buy a home together. The Home Ready program is available in low-income areas with a high minority population, and areas affected by a natural disaster. However, you do not need to be a low-income household or a minority to get approved. You must only buy a home in a pre-approved area. The next low down payment option is the conventional 97, which is a 3% down payment loan program. The conventional 97 is a special program which was recently reinstated by the Federal Housing Finance Agency. They are the parent of both Fannie Mae and Freddie Mac. The conventional 97 requires a down payment of just 3%. The program also allows buyers' down payment to be gifted by a third party, so you really don't have to have your own money for a down payment. The only requirement is that the person who is gifting the money for the down payment is a blood or marriage relative, a legal guardian, a domestic partner, or fiancé to the buyer of the home. The conventional 97 program may cost more on a monthly basis than other loan programs like FHA, but you can cancel the mortgage insurance in as few as 12 months from the date of purchase. So in the long term, your monthly payment may be less once the mortgage insurance is canceled. Now let's look at the Good Neighbor Next Door program. Good Neighbor Next Door, $100 down payment. The Good Neighbor Next Door program is a special U.S. Department of Housing and Urban Development, or HUD program. This mortgage program allows home buyers to purchase homes with just $100 down in approved Good Neighbor Next Door areas. The program is available to members of law enforcement, firefighters, or emergency medical technicians and teachers of pre-K through 12th grade. Buyers in the Good Neighbor Next Door program may qualify to receive a home purchase discount of 50%. Seriously, you could get the house for half price. You must agree to live in the home as your primary residence for 36 months. That's 3 years. This means that if you buy a $200,000 home, I know there's not a lot of those in Southern California, but you can do the math, times 2, times 3, whatever. Buy a $200,000 home with a Good Neighbor Next Door program and live in the house for 3 years, you will be forgiven $100,000 on your loan and get the home for $100,000. Definitely worth a look at. If you're a teacher, law enforcement officer, firefighter, or first responder, another fantastic low down payment program is the VA home loan. If you have served your country, our country, first, thank you for your service. And second, you have a great benefit with the VA home loan. They may not have told you a lot about the VA home loan in boot camp, but it is a pretty cool benefit that you should definitely consider. VA home loans are available to active duty members of the U.S. military, honorably discharged service members, and many surviving spouses. VA home loans are among some of the best low and no down payment mortgage programs available today because they require no down payment whatsoever and never require the borrower to make a mortgage insurance premium payment. The VA home loan can be used for most any type of home, including single family, condo, and multi-unit. VA loans like FHA are assumable by future VA home buyers. Next, and remember, condos have to be approved, but they're not the same approval process as the FHA. And we just closed one in the last 2 weeks that was not even approved by the VA, but we were able to get it approved for this veteran. The USDA loan is guaranteed by the U.S. Department of Housing and Agriculture and allows for 100% financing. USDA loans are often thought of as quote-unquote rural loans, but they're also available in non-rural areas within many U.S. suburbs. One of the biggest benefits of the USDA loan is that its mortgage rates are often the lowest of all the low and no down payment mortgage programs, and its mortgage insurance requirements are also pretty low. In order to qualify for a USDA loan, the income of the home buyer's household may not exceed the local median by more than 15%. Next, let's look at the conventional mortgage options with private mortgage insurance, PMI. If you're looking to get into a house with less than 20% down, a conventional home loan with private mortgage insurance may be an option. Private mortgage insurance, or PMI, is the type of mortgage insurance that protects your lender if you stop making payments on your loan. PMI only applies to conventional loans, but other loan programs like FHA requires MIP mortgage insurance too, although mortgage insurance on FHA loans operate differently than PMI. How much money you put down plays a role in determining how much PMI you'll have to pay. A small down payment means a bigger risk for the lender, so your PMI cost will be more. The type of loan you get, like a fixed rate mortgage or adjustable rate mortgage, will also affect how much your PMI will cost as your credit score. One of the biggest advantages of PMI is that you may be able to get rid of PMI at some point in the future. This means that after you owe on your mortgages below 80% of the value of your home, you can write to your lender and ask them to remove your PMI. If you qualify, it would mean that your monthly payment would decrease. PMI gives you the option to get into a home with less than 20% down, which could help you realize your dream of home ownership. Finally, let's look at what is called a piggyback mortgage. Piggyback mortgage is not really a mortgage at all. In fact, it is really two separate mortgages. It's called a piggyback mortgage because one mortgage is piggybacked on top of the other in order to borrow 90% of a home's purchase price. This loan is also sometimes called an 80-10-10 program. The piggyback mortgage allows the buyer to put 10% down for a down payment. This allows you to avoid having to pay mortgage insurance. Instead of one mortgage, you have two mortgages. The first is typically a conventional loan and is approved at 80% loan to value of the home's purchase price. The second mortgage is typically a home equity line of credit, HELOC, that is 10% of the loan to value. Piggyback mortgages are often used by home buyers who plan to pay down or reduce the balance on their second mortgage within the first 24 months of home ownership. Whichever loan program works for you, it's important to remember that you have options and you may not need to wait to get into your home. All you need to do is give us a call at 800-306-1990, 800-306-1990. Let us see if we can get a game plan put together for you. That is Mortgage 101, brought to you by creditsanitizer.com. You have a credit report. It is wrong. What are you doing about it? You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, have home values hit bottom? Planning to sell your house? It's critical to hire a pro. How to ask your credit card issuer for a better deal, all that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990. We will be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs, the products. You just need to make the call, 800-306-1990, 800-306-1990. Let's take a look at the markets. The S&P 500 now down 34.08. We'll look at the 10-year treasuries down 11 basis points at 3.42. Mortgage-backed securities, the bond itself is up 23 basis points, which means interest rates are coming down just a little bit. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing order conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. 30-year conforming loan locked at 6.202 yesterday. Jumbos locked at 6.074. FHAs locked at 6.168. USDA locked at 6.198. And the best loan on the market for those that earned it, the 30-year VA loan locked at 5.949. These are locks based on the tracking and averages from OBMMI. We don't give the APRs because OBMMI does not report that. So we don't know, did you pay points? Did you not pay points? Did you get a credit? We don't know those things. They don't tell us that part, but they do have 35% market share. So they've got a lot of data right there. Why are the markets doing what they're doing? Well, Bank of Japan, which caused turbulence a few weeks ago when they adjusted their yield curve control, they kind of fixed their rates that they're giving on their 10-year equivalent bond to rise from 0.25 to 0.5%. Met again today, and they did nothing. So they were expected to make another adjustment to their purchases and allow their 10-year to rise even further. It appears they are not that concerned with inflation and are also handcuffed, kind of like the U.S., but we are not following the rules or not doing as one would expect. They owe so much money that if they raise the interest rate more, they might have a problem meeting their obligations. Bigger picture today was the December Producer Price Index report showed that overall producer inflation decreased by 0.5%, which is much cooler than the negative 0.1% drop expected. Year over year, inflation declined from a downwardly revised 7.3 to 6.2%. Much lower than the 6.8% expected, and is a 1.1%, an 11% drop from the previous reading. It's hard to see that. Think about the progress that's been made in the producer inflation. Remember, this is production. So that means if those things flow through, not right away, but prices can end up coming down because the costs that the vendors, the retailers are paying is going down. Core rate strips out food and energy prices, rose 0.1%, which was in line with estimates, but the previous report was revised lower by 0.2%. Year over year, core PPI declined from 6.2% to 5.5%, which was also cooler than expectations of 5.7%. Overall, inflation continues to subside, and the bond market seems to be rallying. Retail sales were down 1.1% in December, which was worse than the 0.8% drop expected. Clear that the Fed rate hikes are taking hold on the economy and is making financing purchases and servicing more debt more expensive, leaves the consumer with less discretionary income for spending on things like retail. This causes a slowdown and should lead to continued declines in inflation. And we're starting to see a pickup in the mortgage applications, and a lot of that has to do with a combination of issues. One of the issues that it deals with is obviously the fact that we're looking at, we can't afford a lot, so people are starting to say they need more money. They're running short of funds. They've got a lot of appreciation locked up in their house. So one of the things that we are talking about all the time is how do you access some of that money? And if you go to rsrnodebt.com, rsrnodebt.com, you're able to take a look at one of our programs that'll help you with that, rsrnodebt.com. You'll get that. Now, part of that, you might also look at, that's going to take a look at what your blended household rates are. Go to rsr2step.com, rsr2step.com, and that kind of gives you an idea. I go through a whole scenario there of why you should do this right now. Take action on consolidating your debt, lowering your household debt payments now, rsr2step.com, because what's going to happen is it'll show you how to save money by doing this today and then redoing it down the road. rsr2step.com. No, I do not dance, and you wouldn't want to see me dance anyway, so that would be a little bit scary. So rsr2step.com. That is the solution for you right there. So let's take a look. Well, and while you're at it, I know, especially since we're getting into the buyer season, the spring buying season, rsrhbg.com, rsrhbg.com. That is our quarterly home buyers guide. Guess what? We release those every quarter. You probably could have guessed that. So let's take a look at today's. I think we've got a real-time real estate segment, and this is a good one. I like this one. Real-time real estate brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Think twice before waiting for 3% mortgage rates. Last year, the Federal Reserve took action to try and bring down inflation. In response to those efforts, mortgage rates jumped up rapidly from the record lows we saw in 2021, peaking at just over 7% last October. Hopefully, buyers experienced a hit to their purchase. Hopeful buyers experienced a hit to their purchasing power as a result, and some decided to press pause on their plans. You shouldn't do that. I'm just throwing that out there for you. We'll talk more about that one. Today, the rate of inflation is starting to drop, and as a result, mortgage rates have dipped below last year's peak. Sam Cotter, chief economist at Freddie Mac, shares, quote, while mortgage market activity has significantly shrunk over the last year, inflationary pressures are easing and should lead to lower mortgage rates in 2023, unquote. I told you yesterday, May 10th, that's when we're going to start seeing some of this real activity take place. That's potentially my opinion there. That's potentially great news if you're a buyer aiming to jump back into the housing market. Any drop in mortgage rates helps boost your purchasing power by bringing down your expected monthly mortgage payment. This means the lower mortgage rates experts forecast this year could be just what you need to reignite your home buying goals. While this opens up a window of opportunity for you, remember, you shouldn't expect rates to drop back down to record lows like we saw in 2021. Experts agree that's not the range buyers should bank on. Greg McBride, chief financial analyst at Bankrate, explains, quote, I think we could be surprised at how much mortgage rates pull back this year, but we're not going back to 3% anytime soon because inflation is not going back to 2% anytime soon, unquote. It's important to have a realistic vision for what you can expect this year, and that's where the advice of expert real estate advisors is critical. You may be surprised by the impact even a mild drop in mortgage rates has on your budget. If you're ready to buy a home today, today's market presents the opportunity to get a more affordable mortgage rate, find your dream home, and face less competition from other buyers. Bottom line, the recent pullback in mortgage rates is great news. But if you're ready to buy now, holding out for a 3% rate, big mistake. Give us a call at 800-306-1990. 800-306-1990. Let's chat about your goals, and let's have a realistic conversation of what we might expect. And let's just see if you qualify. There are a lot of people that qualify way before they ever think that they qualify. That's the Real-Time Real Estate segment brought to you by the Area Trusted Real Estate Professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. When we come back, have home values hit bottom, planning to sell your house, it's critical to hire a pro, wondering how much you need to save for a down payment, how to ask your credit card issuer for a better deal. We got a lot to cover still. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Is your budget getting blown up with high prices of gas and increased costs for other household needs? This is Ron Siegel, host of the daily Home and Finance radio program. Did you know if you have a low interest rate mortgage along with auto debt, credit card debt, or student loans, your family could potentially save $500 or more per month by restructuring these debts? If you'd like a free Borrow Smart analysis with our team, let's book an appointment to see how we might be able to relieve some stress. Schedule your appointment at rsrbsa.com. That's rsrbsa.com for your free Borrow Smart analysis. rsrbsa.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio. Or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the Area Trusted Real Estate Professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Planning to sell your house? Critical that you hire a professional. That is the subject of today's real-time real estate segment. With higher mortgage rates and moderating buyer demand, conditions in the housing market are different today. And if you're thinking of selling your house, it's important to understand how the market has changed and what that means for you. The best way to make sure you're in the know is to work with a trusted housing expert. Here are 5 reasons working with a professional can ensure you'll get the most out of your sale. A real estate advisor is an expert on market trends. Leslie Rhoda Smith, 2022 president of the National Association of Realtors, explains, quote, during challenging and changing market conditions, one thing that's calming and constant is the assurance that comes from a realtor. Being in your corner through every step of the home transaction, consumers can rely on realtors' unmatched work ethic, trusted guidance, and objectivity to help manage the complexities associated with the home buying and selling process, unquote. An expert real estate advisor has the latest information about national trends and your local area too. More importantly, they'll know what all this means for you, so they'll be able to help you make a decision based on trustworthy, data-bound information. Number 2, a local professional knows how to set the right price for your house. Home price appreciation has moderated this year. If you sell your house on your own, You may be more likely to overshoot your asking price because you're not as aware of where prices are today. If you do, you run the risk of deterring buyers or seeing your house sit on the market longer. Real estate professionals provide an unbiased eye when they help you determine a price for your house. They'll use a variety of factors like the condition of your home and any upgrades you've made, and compare your house to recently sold homes in your area to find the best price for today's market. These steps are key to making sure it's ready to move as quickly as possible. If you want to get information on the market, this is historical information. It's not talking about where you're going forward. RSRlistANA.com. RSRlistANA.com. You can go on there, and when you register, it's going to automatically send you a report for Anaheim. Don't worry about that. Go ahead and register anyway. When you get the report, it's going to ask you, what area do you want? It's got every zip code in the country, RSRlistANA.com. RSRlistANA.com. You can get that report yourself. A real estate advisor helps maximize your pool of buyers. Since buyer demand has cooled this year, you'll want to do what you can to help bring in more buyers. Real estate professionals have a large variety of tools at their disposal, such as social media followers, agency resources, the multiple listing service to ensure your house gets in front of people looking to make a purchase. Investopedia explains why it's risky to sell on your own without the network an agent provides. Quote, you don't have relationships with clients, other agents, or a real estate agency to bring the largest pool of potential buyers to your home, unquote. Without access to the tools, your agent's marketing expertise, and your buyer pool, your home's going to sell potentially for a lower price. It's probably going to be limited right there. I'm going to also share with you a free tool for you, rsrsalesmax.com, rsrsalesmax.com. We do a lot of conversations with real estate professionals around the state. RSR Sales Max gives you a few different tools on ways to get more people to visit your property, which will in turn get you a higher price on your property and a higher net on your property. rsrsalesmax.com, rsrsalesmax.com. A real estate expert will read and understand the fine print. Today, more disclosures and regulations are mandatory when selling a house. That means the number of legal documents you'll need to juggle is growing. NAR, the National Association of Realtors, explains it like this, quote, selling a home typically requires a variety of forms, reports, disclosures, and other legal and financial documents. Also, there's a lot of jargon involved in a real estate transaction. You want to work with a professional who can speak the language, unquote. A real estate professional knows exactly what all the fine print means and how to work through it efficiently. They'll help you review the documents and avoid any costly missteps that could occur if you try to handle them on your own. 5, a trusted advisor is a skilled negotiator. In today's market, buyers are also regaining some negotiation power as bidding wars ease. If you sell without a professional, you'll also be responsible for any back and forth. That means you'll have to coordinate with the buyer who wants the best deal possible, the buyer's agent who will use their expertise to advocate for the buyer, the inspection company, which works for the buyer and will almost always find concerns with the house. We're going to talk to one of those inspectors tomorrow right here on Ron Siegel Radio. The appraiser who assesses the property's value to protect the lender. Instead of going toe-to-toe with all the above parties alone, lean on an expert. They know what levers to pull, how to address everyone's concerns, and when you may want to get a second opinion. Bottom line, do not go it alone. If you're planning on selling your house this winter, let's connect. You have an expert on your side in today's market. Get a copy of the Home Seller's Guide, rsrhsg.com, rsrhsg.com. Get a copy of that Home Seller's Guide. It's free, just like all of our guides and things that we give away, rsrhsg.com. So let's talk a little bit about credit today. I think we should get a little bit of credit in here. What are your rights when disputing information on your credit report? Let's chat about that one today. What are your rights when disputing information on your credit report? Brought to you by creditsanitizer.com. You have a credit report, it's wrong. What are you doing about it? Your credit report is a crucial document that details how you manage your credit. So it's important to ensure that it is accurate. But according to research by Consumer Reports, 11% of Americans have inaccurate information relating to accounts listed on their credit reports. And I wouldn't trust that consumer credit report, because I think maybe 11% have accurate credit reports, not 11% have inaccurate. I've never seen a report that's completely accurate. I just was looking at one the other day, and it had all kinds of inaccurate collections on there. Brought the family's score down to basically not lendable simply because of these errors. Credit reporting errors are the top complaint to the Consumer Financial Protection Bureau that they receive from consumers. The CFPB recently noted that some consumers were struggling to resolve errors on their credit reports, so they issued clarifying guidance to reinforce consumers' rights. Erroneous or incomplete information could potentially impact your FICO scores, and if you find something amiss on your credit reports, you have the right to file a dispute with the 3 credit bureaus, Experian, Equifax, and TransUnion. Here's what to know about the process and your rights as you navigate it. You have the right to an accurate credit report. Your credit report is used to calculate your FICO scores, and lenders, employers, landlords, and even insurance carriers in some states can use your credit reports to make decisions when you apply for credit, a job, a place to live, or a policy. As a result, you have the right for the information found in your credit reports to be accurate and complete. It's recommended that you review your credit reports regularly and watch out for inaccuracies or fraud that can negatively impact your credit profile and FICO scores. Through December 2023, you're allowed to obtain a free credit report each week from each of the 3 credit bureaus through annualcreditreport.com. Doesn't necessarily give you the scores, but it will give you the report. Credit bureaus and businesses must investigate your dispute. Once you submit a dispute, the credit bureaus are given 30 days to investigate it and forward the evidence you provided to the business that reported your information, the information you're disputing. So it can do its own investigation and report back to the bureau. If the bureau is reasonably determined that your dispute is frivolous or irrelevant, it can end its investigation. Otherwise, it must provide the results in writing, and if the investigation results in an update to your report, a free copy of your credit report. Additionally, the credit bureau is required to send correction notices to anyone who reviewed your credit report in the past 6 months. If you'd like, you can request that bureau do the same for employers who obtained a copy of your credit report in the past 2 years. The bureaus can't add extra requirements. When you file a credit report dispute, the Federal Trade Commission, FTC, recommends that you explain in writing what you believe to be wrong and provide copies of documents to support your assertion. This may include a payoff statement, past billing statements, or anything else that proves your case. But credit bureaus are not allowed to make the process more difficult by adding extra requirements. For example, you're not required to submit your dispute through the bureau's preferred form or provide specific documents such as a police report or even a credit report. You don't need to file a dispute with creditors. You can contact the creditor that furnished the inaccurate information separately, but it's not required. When you submit a dispute to include documentation and other evidence to support your claim, the credit bureau is required to forward all relevant information to the creditor that provided the disputed information. In other words, if you've provided all the relevant information to the credit bureaus, you're not required to submit it to the company that furnished the data that they're disputing. If you file a dispute with the creditor instead of the credit bureau, the business is required to notify the credit bureaus of your dispute. The bureau will then add a notice to your credit file that the information may be inaccurate or incomplete. If the creditor determines that the information is in fact inaccurate or incomplete, it must update or delete it. Not all disputes are honored. If the credit bureau finds that the information is accurate and complete, it will not change or remove it. However, you can request that the bureau add a statement of the dispute to your credit report. You can also ask the bureau to furnish your statement to anyone who's obtained a copy of your report in the recent past, though you may need to pay a fee for that service. If the information is accurate, but it's hurting your FICO score, note that most negative information will be removed from your credit report after 7 years. Bottom line, discovering inaccurate or incomplete credit information can be a stressful experience, but federal laws protect your rights as a consumer. If you need to file a dispute with one of the credit bureaus or a creditor, make sure you provide the personal information as well as the relevant information and documentation about what you're disputing. The FTC even provides a sample letter that you can use as a template. If you want, you can go to creditsanitizer.com. Creditsanitizer.com. Fill out a brief form, take you less than 2 minutes. You go to that form, and then it'll send you back a link to a site, cleanall3.com, where you can get a copy of your credit, where it'll get a copy of your credit report. Send the credentials over to Credit Sanitizer. The report costs $1 for the trial, $32.99 a month if you don't cancel, but the $1 for that trial. And because of our relationship with creditsanitizer.com, they're going to waive their $197 fee. Waive the fee. That means it's free to you to get a credit audit. That is Your Credit Matters, brought to you by creditsanitizer.com. You have a credit report, it's wrong. What are you doing about it? Credit Sanitizer has the solution for you. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, have home values hit bottom? We'll talk about that one and how to ask your credit card issuer for a better deal. All that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
79% of all credit reports have errors that should be corrected through factual disputing. You could be saving thousands every year if your report was accurate. CreditSanitizer.com provides a free credit report audit when you furnish a specific $1 credit report. You can use this information to request corrections to your report and potentially save thousands of dollars. Get your free credit audit at CreditSanitizer.com. That's CreditSanitizer.com for a free credit report audit. CreditSanitizer.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Real-time real estate segment today being brought to you by the area trusted professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Have home values hit bottom? Whether you're already a homeowner or looking to become one, the recent headlines about home prices may leave you with more questions than answers. News stories are talking about home prices falling, and that's raising concerns about a repeat of what happened to prices in the crash of 2008. Ain't going to happen, in my opinion. One of the questions that's on many minds based on those headlines is, how much will home prices decline? What you may not realize is expert forecasters are not calling for a free fall in prices. In fact, if you look at the latest data, there's a case to be made that the biggest portion of month-over-month price depreciation nationally may have already be behind us. And even those numbers weren't significant declines on the national level. Instead of how far will they drop, the question becomes, have home values hit bottom? Let's look at the latest data from several reputable industry resources. I love being able to just show this great data to you and talk you through it, because the data actually speaks for itself. And I don't know if we have this chart or not, but the month-over-month home values hit bottom. It looks like the gain or the acceleration of price value drops was probably in August. And if we look at the most recent reports from Case-Shiller, the Federal Housing Finance Agency, that's FHFA, Black Knight, and CoreLogic, it shows how on a national scale, home values have changed month over month since January 2022. November and December numbers have yet to come out, so we're not talking about those yet. Let's focus on certain numbers. The red numbers, that if we've got this chart available, do we have that? Do we have the chart, Josh? Yeah, he's got it. Of course he does. I was looking at my notes here, so I didn't see it. But if you're watching us on RonSiegelRadio.tv, any of the socials, ABC News and Talk, AM 1490 video feed, you are looking at the chart. And if you look at that chart, the red numbers are the change in home values over the last 4 months that have been published. And if we isolate the last 4 months, what the data shows is in each case, home price depreciation peaked in August. While that doesn't guarantee home price depreciation has hit bottom, it confirms prices are not in a free fall, and it may be an early signal that the worst is already behind us. As the numbers for November and December are released, data will be able to further validate this national trend. A couple of resources for you. I love giving you the resources. I'll give you the places where you can get data, a lot of the data that we look at. So rsrlistana.com, rsrlistana.com will give you an idea of what the values are doing, how long the properties are on the market. Again, go into that one. It's going to give you an Anaheim report. Don't worry about it. Once you get that Anaheim report, you can put in any zip code in the U.S. and it'll have the data. rsrlistana.com. Again, if you're thinking about selling your house, rsrhsg.com, rsrhsg.com. That'll give you our free home seller's guide. Just go on there, request it, tell us where you want us to send it. We will send it to you. It costs you absolutely nothing. rsrhsg.com. Bottom line, home prices month over month have depreciated for the past 4 months on record, but there's a strong case to be made that the worst may be behind us. If you have questions about what's happening with home prices in your local market, give me a call. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you to introduce me? That is the Real-Time Real Estate segment, again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. And I guess I better look and see what we've got in the way of time here. Do we have time to get into? I'm looking at this report. Let me see how long this report is that I wanted to share with you. I better talk to the boss. Do we have time, Josh? He's over there looking at me that we have what, 3 minutes, 4 minutes? Okay, we're gonna see what we 2 minutes. Okay, you know something? I guess I better just give away some stuff. Can we give away stuff, Josh? Okay, we can give away a few things. Give away a few more things. We can't get the report in. So let's take a look at selling your house. If you're thinking about selling your house, rsrsalesmax.com, rsrsalesmax.com. If you're thinking about a investment or if you've got some equity in your property, you want money out, want to pay that property off quicker, you're an investor maybe, maybe you're a business owner, maybe you have variable income. You're going to get a good check this month, maybe not as much next month. We've got a product that I'm a big fan of. Doesn't always have enough funding for it, so we don't always have it available. Right now, we've got the funding available. rsrhomeselect.com. rsrhomeselect.com. I actually have just put this together for a couple of our private clients. rsrhomeselect.com. And on one of them, the effective APR was, I think, 2.41%. 2.41%. rsrhomeselect.com. I love the product. It's a first position, principal paid, non-conforming, a non-QM loan. Don't worry about that fancy words and all that. Just go to rsrhomeselect.com. Tell us where to send it, and I'll send you a dashboard with a lot of data on it. Then we can talk and see about putting something together specific for your family. rsrhomeselect.com. As always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.